Hello everyone, and thank you for watching ADM Agriculture's weekly grain market update. My name is Chris Colley, and I'm just going to take you through a few of the key points we see in the grain market today. So we've seen a more supportive feel creep into markets over the last week, following heavy selling pressure throughout January and most of February. Chicago wheat on the week is down 8 cents on the May contract. Matif May is down €3, and London wheat is bucking the trend slightly at 70 pence higher week on week. US exports last week for wheat were reported at just over 380,000 tonnes, with a year-to-date total of 12.1 million, which is down 17.5% year on year and 61.3% of the USDA's yearly projection. The Buenos Aires Grain Exchange reported corn and soybean crops as fully planted, with ratings showing increases in production for beans and corn, and with rains expected in Argentina, helping soy and corn crops develop and leaving crop estimates there unchanged. Brazilian farmers are seen shifting away from second corn crop plantings in response to lower prices and delayed soybean plantings. It will be interesting to see how the market reacts to this story, with the funds now holding a record short on Chicago corn in excess of 340,000 contracts, which is higher over the last few weeks. Moving into the Black Sea, Russian wheat exports continue to push, which is undermining global wheat prices, with full season estimates approaching 53 million tonnes now from an earlier estimate of around 50.4 million. Next year, we are expecting similar price pressure and a similar pattern, with harvest 2024 Russian exports placed currently at 48 million tonnes, up from around 46.5 million tonne projections in November last year. We see promising signs also from Ukraine's ag ministry, who are reporting that only 1 to 2% of the crop, or the winter wheat crop, will not make it through the winter, versus the normal expectation of 5 to 7%, which points towards good supplies in the region again next year. The French Farm Office report wheat and barley crops in worse shape than in 2023, following difficult conditions so far this winter. Both winter wheat and winter barley are rated at around 70% good to excellent versus 95% at this point in the season last year, so looking significantly worse. Conditions in the UK remain challenging, and now eyes are turning to the slow progress of the spring barley planting campaign, which sits at around 15%. Similarly, in France, who have had a wet winter conditions so far, plantings are delayed and there are concerns creeping in, although their progress sits slightly higher at around 25 to 30% complete. This is going to be an important watch point for the barley market over the next few weeks, as barley is looking in the UK in particular to displace some of the lower wheat supply in feed rations. Overall, in summary, we've seen a sharp move off recent lows triggered by speculative short covering, and the market is building a more supportive feel as we sit in multi-year low price territory. The surge is held with support coming from talk of US exporters struggling to acquire wheat to fill Chinese purchases earlier in the year, and geopolitical concerns remain around US-Russia sanctions going forward. However, corn and soybean markets remain weak, and the Russian export price will limit any scope for further fundamental upside in the Chicago wheat market. We maintain our view that any significant upside will have to come from a major supply or geopolitical concern in the world, which, while there are flags starting to build, we do not see today. That is all from me this week. Thank you very much for watching. If you have any questions, please do get in touch